And Donna, I'm sorry, it's nice to meet you. I think I've met everybody else on the screen, but not you. I think I've met Andrea real briefly and Derek and obviously Chris, but nice to meet you as well.
Hi, how are you?
So Dan, do you have two items open? Is there someone else with us? Do you have your phone and a computer open?
I don't. I just have my phone open.
Okay, I
Oh,
wonder
I
who
have
that
an
is.
AI bot. Yeah, I was having trouble getting my iPad to download Zoom. For some reason, there's an Apple account issue, so I'm working on that. So I had to get on my personal phone. So it probably has my Otter note-taking device. You don't have to admit it. So
I'm here, but I don't see my where I'm at. So is that me maybe that you're seeing on
Oh, that
that?
is you. Yes. Let me, I just don't
Okay.
see, all we see on there is a camera picture.
Yeah, that's
Calling you
not,
an AI bot.
is that me? How come how did I because I have my video on. I don't know why that would show as a blocked out me. Let me see what's going on here. Hmm. Video, blur my vision. Oh, yeah, that's me, but I don't know why it's not showing me. Video setting. Video, mirror my video, no. Hmm, what is going on? No say.
Oh, we're waiting on Arthur, correct? Let me see if I can reach him.
Okay, you just might get a picture of me with a little camera through me because I don't know what's going on. Hmm, that's weird. Change channel list, choose video filter. Okay. Well, that's better.
Arthur's logging in right now.
Looks like you're coming in better, Director Delara.
Well, it has my name at least, but you can so long as you guys can hear me, right? That's good. Okay. I have to take this in to see what's going on. Hmm, that's so weird. Few options. That's it. Full screen. Mm, okay. You want to enter. Okay.
Well, we can, Letty, although we don't see you, we can get started, I guess. I mean, if you want to, we can wait, Dan, on Arthur. It's just up to you how you
no, we
want to
can get
conduct the meeting until he joins. We can, since it's definitely the
we
first one of the year, but I don't want to keep anyone, we don't
no.
want to hold up our public. Who's Linda Evans? Happy New Year, Linda.
Happy New Year, everyone. Good to be back on the calls. Sorry I missed strategic planning at noon.
We decided to cancel a meeting because you were not able to join us.
The American Express did one of those executive Women's Day lunches at the clubhouse for start of the week. Great speakers. Sorry. I'll be
No,
on program.
thank you for being with us.
Well, let's get started. Arthur and I had a chance to just talk offline a little bit a week ago. And if he joins us, he joins us. Is everybody okay with that?
Yes, please.
Okay, let's roll. So
So we'll
also,
call the meeting.
who calls it to order? Me?
Yeah.
You do, please,
right.
and the time.
Yeah, I call to order. It is 3:05 p.m. on 1/14/2025. Call to order the Finance, Legal, Administrative, and Real Estate Committee meeting of the Desert Healthcare Board at 3 p.m. today. So 3:05. Great. And do I have an approval for the agenda today?
Move approval.
Thank you. We'll move to public comment. So at this time,
I'll second.
Thank you. For public comment at this time, comments from the audience may be made on items not listed on the agenda that are of public interest and within the subject matter jurisdiction of the district. The committee has a policy of limiting speakers to not more than 3 minutes. Committee cannot take action on items not listed on the agenda. Public input may be offered on an agenda item when it comes up for discussion and/or action. Are there any public comments at this time?
There are no public comments at this time.
Okay. On to section 4. Can I get approval of the amendment, the minutes from the December 11th meeting? It's on pages 3 and 5.
I'll move approval.
Second.
Thank you. All right. So
I vote yes.
You could say all in favor if you want,
Oh,
Director
cool.
Logsdon.
all right. All in favor, say aye.
Aye.
Yes.
Aye. Oh, hey, Arthur.
Aye, I'm sorry I'm late.
It's okay. We'll move over to the CEO's report. Chris?
Thank you, Director Logsdon. The only information I have today is just an update that staff has been working on our annual environmental health summit that we are scheduling in September. So that is, starting to come together. We anticipate having an agreement that we will be doing again with the Westin Inn that we'll bring to the Finance Committee in February. And then we will should be having our budget put together by the March meeting. So we will bring that to also the Finance Committee meeting and then ultimate review and approval by the board in March. But looks like some exciting things that we're doing for that, and we'll provide additional information in the near future. That's all I have.
Thank you, Chris. All right. We'll move on to section 6, CAO's officer report. Over to you, Eric.
All right, thank you. Yes, I'm looking at page 6. So we don't have much to report on the medical plaza side. We are 100% occupied as of January 1st, and that our current lease revenue and common area maintenance fees annual revenue is estimated at the $1,547,149.
Great.
And that's all I have on that item here.
Okay. And you can see the kind of unit rental status there on the next page. All right, great. Thank you.
Absolutely.
All right, let's go over to.
I have no questions.
Thanks, Letty. Do I need to open it up for questions or just keep moving?
You should,
should,
go ahead.
I was just gonna mention that the information items, well, I think Andrea told us earlier to remind us that you should open it up for public comments, but as a courtesy, you should ask the board members if they have any questions about any items before you move on.
Great. Well,
Otherwise, we're gonna interrupt you.
I don't mind. Okay, any other public comments or remarks from the board? Great. All right. We'll move on to section 7, financial reports starting on page 8.
Yeah, if we could go to page 9, please. So this will be our year-to-date variance analysis for any of the budgeted items. We note if there's a $25,000 or more variance on there. One of the elements to note on these variances is some of them will be anticipated because we do budget most of our categories equally over the course of the 12 months, that we may see some overages and underages throughout the year just as we experience expenses that might only be an annual expense. And so we might show an overage for 1 month, but that would balance out as we move along. So I've made a couple notes of items that just to point out, which may not have been specifically noted in the last few meetings or that just came up. But here we've got one of the things to note as far as the, we're up approximately 1.3 million in our income, the line 4,000. This is primarily due to the investment income and slightly higher property tax revenues. We did budget an average of what our returns have been for the last 5 years. And so our performance to budget is based on that element. And then property tax revenue, which we are slightly up on, was budgeted at just under a 10% increase, which was based on the average over the last 3 years. To point out a few items, so we do have under direct expenses, we do have lower wage expenses, a good portion of that under budget. That's primarily related to staff changes, which occurred after the budget was drafted. So such as the CEO and CAO promotion, hiring of accounting manager, and we do have an open position listed for the director of development. And then there's related categories to that. Since we're down in the, or have the wage positions, we're going to have lower insurance expenses and such retirement expenses with that. The CEO discretionary budget, on here it's showing 66,000 over budget, but at the last meeting we had approved an increase and several sponsorships. So while this does show over budget for the 6 months year to date, we are not over the current budget of the 100,000 for the fiscal year. And
Excuse me 1 moment, Eric, because we do have a new director with us, and you're still on page 9. Which line item are you referring to? Oh, 6325. Okay, thank you.
I'll use the number. Sorry, I had them noted here, but
Thank you.
no problem. And then let's see, under the 6,500 line, the professional fees expense, that we do tend to be under depending on where we need the services of various consultants. But the item that I wanted to note here just was the higher legal expense that we had for the year. That was primarily due to the hospital lease negotiations, as well as we hired an additional legal counsel during that time frame. The other elements are within expected ranges for the year. And then the very last line, just the net results from our medical plaza. We are up for the year to date. A lot of that really is due to lower repair expenses that we anticipate. And that's resulting in our being up for the year so far. That's all I had on this particular page. So I don't know if you want to go through the pages or just have me note. There's only a couple other pages I had some comments on to make. It's up to you, Director Logsdon.
Well, I'm going to open it up to see if anybody else has any comments. I have some comments, but I think my comments can be taken offline. It's more or less, I think, information just for me learning all of this that you're talking about, just to get some background that I don't think we need to discuss in this meeting. So anybody else have comments, the directors or public comment?
Not on this page. Thank you.
Okay.
Yeah, and we can do some more one-on-ones with you, Dan, as you desire. So
yeah, I have some more questions just about historical performance, expected future performance, and then understanding our legal counsel's employment status and things like that. So, but we can address those things offline.
okay, thank you.
I don't have anything until page 15. So we're just going through the income statements and balance sheets. so far. So
Page 11, on page 11, on the profit and loss sheet, my question is, Eric, typical question that I usually ask, are we on target for our 6 months place right now? Are we on target, or is there anything that we should be concerned about?
no, the items that I made note of were just specific variances I wanted to point out. I don't have
Okay.
any concerns on what our performance is just yet. A lot of them are related, the overages and underages are just related to how we're budgeting equally each month for some expenses that we have that will come up, only one time a year or less frequently throughout the year. And so nothing to note at this point on that.
Perhaps you could highlight the net income number year to date.
Correct.
Sure. Yeah, if we could go to the next page here. Very bottom, please. All right, so the net income that we've had so far this year, we are showing a net income of 1.478 million, and our budget was showing a loss of 2.3 million. So the main reason for the budgeted loss just has to do with our budgeting grants and other expenses, and also the anticipated receipt of our property tax revenues, which we do have some of those coming in December. One of our heavy months ends up being June. And so that particular category for the income will be adjusted and is not noted on an equal basis each month. So a lot of that's really just tying back to the investment performance is a big bulk of that, and being under in our expenses so far for the year.
And,
Thank you.
And Eric, is that, if we kind of forecast that for the next 6 months of the year, is this an expected trend? Meaning, are we expected to stay under our expenses, or are there some annual expenses that pop up certain months of the year that are going to adjust us back down to our budgeted, what we estimated for our budget? Does that make sense? I just want to know, like, do we have one-time expenses that we don't kind of expense throughout the year, that we just expense them in the year in the month that they come? Do we have any of that coming up, or can we expect kind of similar performance for the next 6 months?
We do have some of those coming up. We will expect something from the most recent election. Will be the county expenses related to that. There are some annual subscriptions and whatnot that will come up a little bit later in the year. But as far as what we anticipated when we set up the budget, we were a little over $1 million was our expected net income for the year. So that will taper off as we go through. That would be assuming we hit our expenses, but we are trending under in the expenses.
Yeah, and I noticed a negative in the, I guess, over budget in the total column on page 12, major grant awards spent expense. So we're in a negative there. So that means we've underspent on those grant awards, like you were mentioning. Is that what that negative 1.893 million?
Yeah, just so far year to date, using those equal values each month, we're underspent so far year to date. The hard part with those grant applications is they come in as they come in, and we can't necessarily predict those. While we do have some elements such as like RFPs, which we've done most recently, that was on the foundation side, not on the district side. And so those will be reflected on those reports. But
we don't expect a negative value there on the total at the end of the year. Is that correct?
No, we budget to have 5 million in the grants. Sorry, Chris, were you saying something?
Yeah, no, I was just going to add that, one thing here on the grant expense is that we book the grant, or we incur it as an expense when the grant is awarded, not when we're actually paying it out. So, so the 600,000 is what's been awarded so far year to date, but there will be more coming. And to Eric's point that, we've got the 5 million budgeted for the year. There'll probably be larger amounts that will come in the remaining 6 months.
Great.
right. Was that the last question on that page, Director Delara?
Yes, thank you.
All right. Sounds good. We can move forward then, please. My next note isn't until page 15. All right, right at the top. The only note I had here wasn't anything of concern, but in looking at it from a different perspective, knowing that this would be the first round with Director Logsdon, we do have our balance sheet and just compare it to last year just for information. It doesn't necessarily always tell a story, but one of the first things when I was looking at it, trying to see, well, what could I make note of? The accounts payable, while we do not have a high accounts payable right now, it's higher than we had last year. Those checks have already been printed and paid out. Not something we typically carry a high accounts payable balance, more of as we're closing out the month, we may receive those invoices in, charge them to the month, and then they're paid the next month. So we're very good at getting our accounts payable taken care of. I just wanted to make note of that in case that had come up at all. I have no other specific comments until page 21, so we can.
I just want to comment on the checking cash account on the balance sheet under current assets. Is it typical to see that kind of fluctuation year to year? Is there a base, is there a base amount of working capital that you like to see in this, Eric, that you expect for us that we need available at all times?
Sure. Andrea, could you go back to the prior page, please?
Yeah, I think it's page 14.
So yeah, right now we have, it depends on when the property tax elements come in. So we just had a $2 million payment come in December specifically for the checking account. And so normally if we get to this high, we would start looking at transferring those into the facility replacement fund, depending on what the anticipated payment needs are of the grants for the next quarter. So we do have some fluctuation there between around $1 million up to a couple million. But usually when we get to around this 4 or more, we'll start transferring those into the investment accounts just so we can start getting a little bit more return on it rather than sitting and checking. But it is based on, December is a big month. And then as we get closer, June is another big month during the year where we will get higher property tax deposits.
Excellent. Yeah, one of the things I'd like to know is what is the working capital required here? I know we have a big investment account, so we obviously show a large working capital here, but what's required, so we just have an idea of, do you have an estimate of when we need to move money over? Is it a $2 million working capital we need to keep available at all time, and the rest can move into a longer term investment account like you have? I'm just curious, these are kind of things we can probably discuss offline, but is there certain KPIs and metrics that you look for in terms of how we're operating? So,
gotcha. No, I'll make note of those so we can.
Okay.
Yeah, just as there's no specific requirement, but just as a rule of thumb for us, Director Logsdon, is we look at what our future cash outlays are, especially the bigger ones are the grant payments. So normally we'll get an updated cash disbursement report from the program team. And that way we can project a little bit what's happening in the next few months. And then like Eric was saying, in say December and January, when we get the larger property tax receipts, then we'll move some money over into the investment account, so that we're typically around, $1.5 million, $2 million, something like that. And then then we'll get the larger chunks of property tax again in the late spring. But we will move monies then back and forth to the investment accounts as, say, if we need more, then after we've moved to the investment, then we'll move some back as well. So we just try to keep, a decent comfort level of, $1.5 million, $2 million, roughly in that operating account.
Got it. Okay. Thank you. And then the last question I had was just kind of clarification around page 15, long-term liabilities, lease deferred inflows. Just a little clarification on what that is.
Oh, the lease deferred inflows. This is a newer line item that we've had in the last 2 years, as we've made adjustments to how we recognize leases, both incoming and the leases we have for property. And so this is a calculated figure that just factors in lease income that we'll have later on. I hope I'm relaying that correctly, Chris, because I know
because
the way
it's
that the auditors were.
Yeah, it's a new accounting standard in the last couple of years, because it used to be that we just recognized the lease revenue as we received the lease payments at the Las Palmas Medical Plaza.
Correct.
But the new accounting standard requires us to accrue the rents that we have at the Medical Plaza. So, we have leases that are up to 5 years, some that are up to 10 years. So we have to accrue those both as an asset. So we would see that on the asset side of it as well, and then the liability. So as time passes and we receive those monthly lease payments, then this reduces these balances. So as we collect, then they're relieved from the asset, the receivable side, as well as relieving the liability side of that equation. So it's deferred inflows, which means that those are amounts that we would receive in the future.
Correct. It's just weird to see that as a liability, and it's weird to see it increase year to year unless you sign new leases or something between that, and maybe that's why.
Yeah, and that's what it is. It's all about timing and when new leases come on. And so then you might have like a new 5-year lease in this year, which last year that same suite may have only shown 1 year remaining.
Yeah, so it's kind of an odd thing to factor into a long-term liability. At least I'm just trying to grasp what how to actually incorporate that into my thinking. But we can talk about that offline. That was the last thing I just wanted to clarify. Thank you.
Yep.
All right, and that was all. I didn't have another comment until page 21. So if there's any other questions or comments before then, I can.
Any other questions or comments from the public or any of the directors?
No, thank you.
Thanks. Go ahead, Eric.
All right, perfect. So this one, it's a small variance, but just in case you are comparing numbers, I wanted to make note of it, that on this particular page, which reflects the actual receipts of the property tax deposits we're getting, so far for how we've anticipated we would receive it, we're up $232,000. That is a different value than what you'd see on our summary sheet, which is showing about $65,000 up for the year. So I just wanted to make a note on why there's that variance. On the $65,000 that we have on the income statement, that is specifically for this year's revenue, where this $232,000 that you're seeing here at the very bottom right corner, that's reflecting all the receipts. And so part of the receipts that we have had were revenue that we accrued at the very end of last year, but we just hadn't received it yet. So that's why there's those two. So this is actual receipts compared to what we have received to our budget, if that's making sense there.
I think so. One's actual, one's accrued for this year. Is that what you're saying?
Yeah, because we usually have a couple categories of the payments that we accrue at the end of the year. And when we receive them, sometimes they're a little bit over, which is generally what we've seen, is that the payments have been increasing over the last several years. So this is just related. I just want to note that variance because I know I would ask that question if I was looking at it. So,
and those are amounts, as we talked the other day, Director Logsdon, about that they're still fiscal year for tax receipt purposes. They're fiscal year 2024 amounts, so that 75,000 and the 139,000 are actually fiscal year 2024 dollars. So when we do our audit entries at the end of the year, we accrue for those on the balance sheet as a receivable. So the posting of those actually go to the receivable account. And then we start booking, say, the 272,000 I'm assuming possibly is new year money, but it could be prior year money too, but.
Depending on when it's received.
Yeah, so it's more of kind of a timing issue of when the remainder of the fiscal year 2024 dollars are received, and they flow over into the new fiscal year of July, August, etc. Sometimes September, October.
Perfect. Thank you.
Yeah, and on that same note, for the July and August, often you won't see any, you'll see values listed here because we're receiving those against a receivable as opposed to recognizing them as income. We won't show any income on the first couple months of the year typically.
Mm-hmm.
All right. Well, that was those specific items I wanted to note in this month's financial report. But I'm definitely able to answer any questions that may be needed for the remainder of the report.
So, if there's no questions before page 31, can we just touch on 31? If there are no questions from other board members.
I think that sounds fine. Let's move to 31.
Eric, can you just tell us where we're at right now with our grants?
Yeah. So far for the year, we've granted out $963,000 of our $5 million budget. What we have had though is a couple things that offset. So if you'll see, it's the third from the bottom line, highlight it. You just scroll down there, the net adjustment for grants not used. So there's a value of $337,109. That value takes into the remaining amount that we had at the end of last fiscal year that we reserved to carry over to the next year, as well as a handful of other grants that their final reports have come in under what their awarded amount was. So that helps to offset the value and increases the available funds. So while we've only spent $963,000 of the $5 million, what we have available for this fiscal year is going to be that $4.3 million for new grant awards.
So, do we anticipate having a lot of asks to take that amount, Chris? Are we anticipating? Do you see some of the grants that are coming before you right now that haven't reached to the point of actually coming to the board but are in discussion? Do you anticipate that being taken mostly, or? We can't hear you, Chris.
Donna, maybe you could assist us with what you're seeing right now on the program grants side of things, please.
We do have quite a few in the pipeline that are under staff review right now, and the ones that we have some draft applications I can share with you. One is San Gorgonio Memorial Hospital is looking for $10 million to expand their behavioral health department. So there's a lot out there. There's like 17 that are in draft form. So I think you will see this number go down.
Okay, thank you, Donna. If there's no other questions, I'll move approval of the financials.
So, second.
Is there any public comment?
There is no public comment, but all in favor?
Aye.
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 Okay, next item. All right,
Chris, did you want
go ahead.
Oh, I just was checking, making sure if Chris wanted me to move forward with these.
Now, if you would go ahead and take them, I can provide assist if you need.
Sounds good. If we could go to page 32, please. All right, so what we're looking at here is the consideration to approve addendum number 2. What we have as part of our lease with Desert Regional, we conduct inspections of the facilities. We've been using the services of Dale Barnhart, who is a retired administrative director of facilities management, who is with the RMC. We are requesting the approval of addendum number 2, which will increase the current duration through December 31st, 2026. So we're adding 2 years to it, and we're increasing the current hourly rate from $100 an hour to $125. And I wanted to note that the $100 rate has been in effect since 2019 when this consulting agreement began. So we have included the addendum and recommend approval and would be able to answer any questions.
I just have a couple of, I don't know if they've been caught, but on page 34, if you can replace the previous CEO's name with our current CEO.
That was an oops, sorry.
Okay. And then on page 35, if you can update the amount to 125.
Oh,
And
I
on page,
do want to, oh, I'm sorry to interrupt here. I did want to know, I believe this is the original agreement for reference, not the addendum. So
okay,
that would
okay,
be,
good.
Correct, yes,
Well,
correct.
good. I'm glad to hear that. I was wondering why.
She's got her
This
glasses
was-
on today. She's got her glasses on.
Okay, so that's gonna be updated. I didn't see an addendum. I just saw the original contract. So where is the addendum?
Right
that should be,
before.
Right before? Oh,
Yeah,
right there.
right
Okay,
there.
okay, okay. Then I will move approval.
I
So-
second.
Second, I'll second that.
Great, thank you.
Yeah, we put the full agreement in there, so if there
Okay,
needs to
good.
be reference to that.
Okay, good.
Yeah,
Thank
it-
you. Okay.
Okay.
Is there any public comment?
No public comments.
Great. I think is that our last item?
All those in favor?
Aye.
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 Actually, one more agenda item.
all right. So that one on starts at page 38. Oh, there we go. So what we have here is an agreement for not to exceed 25,000. The board had previously approved an agreement with Regional Government Services to provide an assessment of the human resources of the district and provide their recommendations for improvement. So this assessment has been completed and will be presented at the upcoming meeting on January 28th. So what we would like to do is request approval for a new services agreement with the value not to exceed 25,000 through the end of calendar 2025 to work with RGS to implement those actions necessary based on the recommendations that they provided. We included a draft of the agreement and are able to answer any questions as needed.
And also we do have Sherry Johnson available, who is representative from RGS, if there should be any questions for the consultant.
Chris, have we used them before in the past?
Just for the HR assessment that we have been working on the last few months. And the reason that we are proposing this extended agreement is that we really feel good, staff really feels good about the organization and the staff that we've worked with at RGS. And we're appreciative of the feedback that we're getting through this assessment report. And we just felt that it was a good continuity to continue with RGS to help us with the recommendations, as well as also provide, ongoing HR support and guidance, especially as we, get Eric more up to speed with human resource understanding internally, and then to ensure that we're complying with, any human resource legislation.
Great. What documentation or what kind of deliverables do they have for us that they'll be giving us with this money? Like what is it hey, I've got an HR question, you can answer it, or is it we're going to review your policies and update them? What's the
There's a
deliverable?
there's a combination of that. You'll see, Andrea, if you go to the scope of work page after the agreement. So here's a scope of work for the services that will be provided. So to answer your question, Director Logsdon, there will be a combination of what you just said. There will be some answering of questions. There will be, assisting us if we have some internal questions or issues that we have to address, supporting us with updating our employee handbook, any policies and procedures that we need to work with to update or enhance. So it's a pretty extensive scope of work that we will be have available to us through this resource.
And they do, it looks like they review and administer our payroll as well, if I understand that correctly.
No, they do not. We process our own payroll internally.
Okay.
So we maintain all of our internal processes, all of our document files, which the document files, I believe, are in very good order. We haven't received any negative comments about that from the assessment report. And, so they're available then to review, whatever we're doing to make sure we're complying with, with law, with processes, giving us guidance so that we stay, within the boundaries properly.
Right. And I assume Eric will kind of be their primary point of contact, because you're kind of part of your role, Eric, if I understand right, is also HR on top of CAO and the CFO stuff that you've been doing for us. Is that correct?
Yes.
Okay. And you're happy with them, Eric?
Yes. They've been very easy to work with so far, and looking forward to making sure we're up to speed on everything we need to be.
Awesome. Excellent.
And they'll be working with us on, also doing some compensation studies and, classification studies, et cetera. Just make sure that we're all in compliant with everything surrounding human resources.
Great.
I have two comments and slash question. Okay, so first one is, this is all very very detailed, so I'm glad that we're bringing on an expert to assist Eric and assist the district in this. In the evaluation of our CEO, the annual evaluation, there's question. I don't know if we're going to use the same tool that we've used before, but Director Shore, as you recall, there's questions there relating to relations with staff, if there's development of staff, there's there's questions that are related to that. So I don't want to micromanage our CEO and our CAO, but is any of this information going to be made available to directors so that we have a better understanding of how the organization is running, so that when we do the annual evaluation, that we are able to be better informed so that we can assess that part of it? Or how is that, how is this information, if any, are we going to be privy to?
Letty, do you feel there's a deficit of information that you have now?
Well, I think, when I can't remember exactly the questions, but I believe there's, like I said, is the CEO developing providing development opportunities for staff? Is he making himself available? Stuff like that, that I kind of remember. And I think we make the best judgment based on outside view. And so I'm just wondering how, if any of this information is going to be made available, because I don't want to micromanage. But yeah, I don't think that we have. I think a lot of times we even put NA, and if we're going to use that same tool again when the time comes, because we have this expertise that we are now going to have, are we going to be better able to assess those questions related to management?
I think you're right about the form. Number one, about the form. I thought the form was absolutely too obtuse, if you will. And the number of NAs that you recall are similar to the ones that I recall. I think if you got a periodic report from this organization quarterly, I think that should give you enough information to A, give you enough information, and B, avoid the temptation. And it's a very real temptation to micromanage. I mean, that's not our job. Our
Right.
job is to oversee, and if we can get a report quarterly, that would satisfy me.
Now, correct me if I'm wrong, Sherry, but I don't think we have that type of service included in the scope of work. I mean, it's something that I think we can do, but I think we also have the ability, as we've talked in prior sessions, that the 360 internal 360 could be used as a, and I'm certainly open to it, and I think all CEOs should be open to it, to be able to get the feedback from staff. So, you know, we can develop, you know, a process like that, because that's been missing for a long time. That, you know, to have, you know, some feedback from staff with regard to CEO evaluation. So,
Okay.
you know, I can work with the RGS staff on that and see if that's something that they can are willing to provide a report on, or, you know, we can come up with something. But Sherry, correct me if I'm wrong, but I don't think that that's included in the scope of work presently.
Right, Chris, I would, for the most part, agree with what you just said. Our focus is really to provide samples or direction to the Chief Administrative Officer regarding staff development opportunities, not only for him, but also for staff, if applicable. So something a little bit more than that to, you know, assess the CEO's performance in regards to staff development would be something new that's not currently in the recommendations of the assessment, but we would certainly be open to assisting in any way that you would see fit.
Maybe, Chris, you could show her the annual evaluation that we do for the CAO. And if you could kind of take that into consideration as to kind of the information that we would be looking as directors to be able to answer those questions better informed.
Yeah, sure. We can work with Sherry and her group to see what works best as far as a communication or a reporting type of mechanism.
Great.
The other question that I have, my second and last one, is having to do with 1.16 and 1.18, where it talks about reviewing of laws. You know, I keep reading about organizations and remote working. You know, is there a trend to come back? And what are the pros and cons for working at home and not working at home? What are the liabilities for the organization? Is that something that she's going to also assess, that those laws applicable to our current structure?
I don't think that's a specific thing in this, if I understand this right. It may be something that Eric can request, you know, as the kind of HR guy on the,
Okay.
So I think that's where we would go, and we could request that as a board to say, hey, we would like to review the personnel policies as a whole and understand work from home or whatever you're interested in. And I think Eric would go back to them and have them help him review it, if I understand how
Yeah.
this relationship's going to work.
Well, if there are laws that would be applicable, that again, if you have the knowledge, I don't think we do, or even
Right.
staff does. So if that's not, I was reading into it that, oh, then this is monitor changes in laws, regulations, and technology that may affect the human resources function. So that's why I was kind of reading into that. And maybe if it's not included in that, then maybe that's something that, that we could, if you could think about how that would fit into it, but.
Yeah, and correct me,
Those are-
Sherry, if I'm wrong, but I mean, if there's any kind of laws or rules or changes to remote work or a hybrid model that certainly we need to be aware of, you would be providing that kind of information if we're out of bounds with how we're operating.
Oh, absolutely. And there are no current laws in California that regulate remote work environment. In fact, our agency, which is also a government agency as a joint powers authority, is fully remote as well. So it's, the organization or the agency's decision and their unique culture as far as what fits best. If they go fully remote, hybrid, or fully in person, that's an agency decision.
Okay, that's good to know. It's interesting because actually I've been told by another HR consultant that there are considerations, maybe not laws, but safety issues that you have to consider, making sure that they have the right technology. And anyways, but I don't want to get too far into it. But if you tell us that things are working fine, I trust you that you have the expertise to do that. But I'm just a little bit surprised by that. But okay.
Yes, ma'am. We're here to help. Thank you.
Okay, thank you.
Any more comments on this item?
So I move approval.
Second.
All right.
Is there any
Yeah,
questions
Director,
from the
Director Logsdon, you could say all in favor.
All in favor?
after you ask if there's any other questions from anybody?
Any other questions from anybody here, public or board? Oh, thank you.
none.
Great. All in favor?
Aye.
Great. Make adjournment of this meeting, and we can go right into, I believe, the foundation meeting.
Thank you, Sherry, for joining us.
Thanks, Sherry. Appreciate it.
Thank you.
All right. Thank you, Andrea. I'd like to call to order the next meeting for the Desert Healthcare Foundation at 15:52 on January 14th, 2025. Can I get an approval of the agenda? Move to
I'll
approve.
move approval.
Thank you. And a second?
Second.